Alright, hello everybody. Welcome to another video. In this video, we are going to cover the power of three model. This is a three-step phase, three-stage model that consists of price consolidating, followed by price manipulating, taking one side of the range, and then distributing to the complete opposite end of that range. It is a three-step plan, and I'm going to cover exactly how you can take advantage of this power of three model. What are the three steps in this plan? It goes by AMD. A being accumulation, M being manipulation, D being distribution. What do we notice right here? I want to make sure this is pretty obvious for you to understand. What do you notice in price right here? Price has been consolidating for this period of time, and this is step one of the three-step plan. Typically, the first step, the accumulation phase, is the longest phase of the three. The manipulation phase is typically the shortest, and the distribution phase is typically in between. Now, sometimes the distribution phase will be longer, but that's the typical sequence. This is the accumulation phase, the consolidation. Price consolidates, heading into a session where we are likely going to run to a certain area in price. So what do we do in this scenario? You want to mark out both ends of that range that has formed. We have number one, the range high, followed by the range low. Now, why would it be unwise to enter into the markets at this point right now? It would not be wise to enter in the markets right now at this point because neither end of that range has been tapped. And so you shouldn't enter because price can go to one of those sides of the range. You want to wait for that to occur first. But what do you notice in the markets right now in price? We have 1, 2, 3, 4, 5 here, highs that have not been taken. And we have 1, 2, 3 lows that have not been taken yet. So we have highs and lows right now that are draws for price to take. You want to wait for price to take one end first. And if the other side is still available, if it still hasn't been breached, that's what you want to target. The algorithm knows that people who are short right now, their stop losses are resting right here above those highs. People that are long right now, their stop losses are likely resting below these lows. And so we take advantage of that by waiting for price to do damage to one side and then get into the move for price to go do damage to the other side. But we're in that move while price is heading that way. And so let me get into it with you. This is stage one, the accumulation phase. We want to wait for price to take one side. I'm taking it very slow, trying to make it as clear as possible for you guys. So what has price done now? Price has taken the range low while leaving several highs behind. So we can expect price to want to reverse and take some of the highs. Now, it could head a little bit lower, do some more damage, but then eventually you want to aim for the highs in a move that makes sense. So when we go on the lower time frame, look at all of these highs that have been left above. Look at all of these highs that are resting above. People that are short right now, their stop losses are all above these highs. And so we can expect price to want to come back above. So that is stage one, the accumulation. As I said, typically stage two is the shortest stage. This is the manipulation phase right now. Right here. Let me write down the phase, manipulation. And what you can expect is price can come a little bit lower. It can come a little bit lower. That's not out of the picture. But what you're looking for after is for price to distribute to the range high. As I said, you can take partials at some of these highs above along the way. That's what you want to do, if that makes sense, alongside all of these relative equal highs above. This is low resistance liquidity, meaning price should most definitely want to come back for some of these highs. So that's the manipulation phase done. Accumulation number one, manipulation number two. And what do we see now on the lower time frame? Price came, V-shaped reversal, inverse this gap right here. V-shape inverse gap right here. This is one of the entries you can take. Now you have a plethora, all kinds of entries you can pick from, whether it's a V-shape reversal inverse gap, a break of structure plus a fair value gap, a change in the state of delivery plus a breaker entry. You have options, whatever makes the most sense for you. Now, some entries will typically be a little bit later than others, which means your risk to reward might not be as ideal, like the breaker. It's more of a confirmation, but that's the trade-off you have to decide to do. So now let's cover what phases are we in. We have phase 1, accumulation. We did so. Phase 2, manipulation. We did so. We took the range low. We swept that low. People that are long right now are stopped out. People that are short right now are like, yes, price is heading in our direction. Let's see if price wants to come lower. We can get more profits. And so the markets know that. And so on to the third stage we go. And that is the distribution stage, the distribution phase. This is the third phase of that 3-phase move, the power of 3. We get the inverse gap, sweep of liquidity, PO3 type of move, and you can target the highs above. You can take a move on the lower time frame, like let's say on the lower time frame here on the 1 minute, we have a change in the state of delivery right here. Change in the state, breaker entry, you can enter off that, target the highs. That works as well. If you want to wait on a little bit of a higher time frame like the 5 minute, you can use that as well. Like I said, your entry might be a little bit later. That's your decision. And this is the third stage of the 3-stage plan. And that is the distribution right here. So we enter on the inverse gap, this PO3 type move, and let's see what price decides to do. There's our entry. And there we go. Range high taken, AMD, accumulation, manipulation, distribution, power of 3 type move. Now everyone that went in short has been stopped out. Yet we were capitalizing on the move here, waiting for the people that were long here in this accumulated part of the move. They got stopped out, reversal. Now the market is trying to do damage to the highs here with people that are short. We know this. We enter on that move above and we capitalize on this 3-step plan. And so that's how you use power of 3 to your advantage. All right, so here's another example of using power of 3 to your advantage, the accumulation, manipulation, distribution phase in the markets consistently, day by day. So what are we seeing here in the markets now? It should be clear to you now what we're seeing. We have price form a range right here, slowly descending range here. We're leaving all kinds of highs behind. When I go on the lower time frame, look, people that are short, their stop losses are all resting here. 1, 2, 3, 4, 5, 6, 7 highs there. So it makes sense. We have a little bit of a range forming. I'm looking to see if price is willing to either go to range high and come back below, or go range low and then come back above. We took one of the highs in this range, which is not always the most ideal scenario, but still a lot of highs are resting above. So it still would make sense if price wants to come for those highs. Additionally, look at all of this liquidity to the upside as well. So that on top of the already existing PO3 formation here, there is reason to expect price to head higher. What happens? We have the range low taken right here. Range low. Let's mark out the range high right here. And let's see now what price does. Price goes through it. And as I've said, price does not necessarily have to take the low and right away go to the high. It could head lower for a bit. We have lows here. It could do some more damage and then eventually return to the highs above, or the opposite end of the range. So we'll look to see if price wants to tap into one of these levels. Not yet tapped. And there we go. Okay, so we took that low right there. Low taken, swept sell side, range low taken. Accumulation phase is done. So let me just write that down. Power of 3 AMD. So here is the accumulation phase completed. We accumulated here, followed by the manipulation phase all over here. So we manipulated here, going down into a sell side liquidity level, which is just as valid. So manipulation here, we will see if price ends up going to that level, but still we'll hold this one for now. What should we expect price to do? We can come and take this low as well and then distribute higher, but eventually we should expect price to distribute to the highs. We have lots of low resistance liquidity up here on the lower time frame, range high, PO3 type move. It would make sense if price wanted to come and head higher. So let's see what price does. We have the range low, range high formed. Sweep of sell side liquidity tapped in. And on the 5 minute, what do we have here? We inverse this minor 5 minute gap right here. So we have an inverse gap right there, followed by a fair value gap right here with a break of structure of this swing point right here. Now, your entry, you can wait on whatever you would like, whether it's an inverse gap V-shaped reversal, fair value gap, break of structure, breaker block with the change in state of delivery. It's completely up to you. I would wait for a retest of this gap. If you're more comfortable with changing the state of delivery and a breaker, you can go with that as well. It's just the entry will likely be later on. This is a 3.37 risk to reward, stop below the low, manipulation, and what can we expect this to be? We are expecting this to be the distribution phase right here. Whoops. Distribution phase right here. And so this is exactly what we're expecting this AMD model to look like. I will take this out for now, but this is exactly what we're expecting. Price taps into that gap. That's our entry right there. Taps into the inverse gap as well. Now we're going to wait to see if price is going to continue that move up. And yep, price shoots up, starts to take some of the highs, and it goes for the range high. So there we go. That's that distribution phase. That is the 3-stage plan. Accumulated here, slowly grinded down, manipulated the lows, tapped into a 50-minute sell side liquidity level right here. Alongside that manipulation, reversed, inverse gap right here, fair value gap with that break of structure, entry over there, expecting price to distribute back to the range high. When you go on the lower time frame, we even got a change in the state of delivery here, so it all matches up. That is a London session type of play right there. So let's remove all of this. We'll keep that there. Let's see what price does in the AM session. What do we notice price is beginning to do right now? Well, as you can see, I'm going to remove all this, make it just to make it clear. All right, what are we seeing price do here? Let's go on the lower time frame. Let's go on the 5 minute. Ooh, what do we have here? We have what looks like to be another range starting to form. We ranged right here. We have range high here. Let's form it range high right here. Range low right here. Let's make it a little bit more. And so that is the accumulation done right here. So we accumulated right here. And what did we do once more? We began to manipulate below the range low. So now we have the manipulation phase right here. Again, as I said, accumulation phase is always typically the longest phase. Accumulation is typically the longest phase. Manipulation is typically the shortest phase. Let's see. Would it make sense for price to reverse from this point? What did we do? Price came and swept this low here. Sweep of sell side liquidity alongside a 50-minute bullish imbalance that we're delivering out of with that PO3 type of move. When we go on the lower time frame, we have, let's see, relative equal highs here alongside the range high with that PO3 type of move, the thesis of that move, rejecting the midpoint of that 50-minute bullish imbalance, sweeping sell side liquidity from around the London session just after it. We can see and expect price to reverse and come for some of those highs. That is, again, the basis of that PO3 type move. Like I said, we also have highs above here on the higher time frame, so it would make sense to target this direction for price. Let's see if price will distribute to some of the highs here. So let's see here. I'm going to mark this out as equal highs. with that range high. So let's see what price decides to do here. We can go on the lower time frame, look to see if there's anything that is worth taking. There's the manipulation. Let's see, 2 minute. Okay, you're starting to see change in the state of delivery on the 1 minute. Nothing on the 3 minute. 4 minute. Okay, 4 minute offers a decent entry right here. It's not the typical time frame you want to enter on. Well, you could. It's just not the typical one that people usually enter on. You could look on the 1 minute. You could probably get an entry on the 1 minute here. Change in the state, break your entry right here. You can enter off that change in the state, fair value gap, inverse gap right here. If you really want to get a premature entry, you could have entered off the 1 minute inverse here. That's obviously a lot riskier. If you want to wait, you wait for the fair value gap. Change in the state of delivery with this breaker, you could enter right there. Wait for price to retrace a bit, enter there. Or you can go on another time frame like this one. You get that inverse gap alongside with those confirmations. Alongside the confirmations I mentioned on the other time frames. Stop below the low, target the high above. And so that's around a 1.9-ish risk reward, inverse gap here. And what do we expect price to do now? We manipulated. We expect price to carry through with that move, with that distribution above. That's what we're expecting price to do. And so let me mark out the next phase we expect price to do. The distribution phase to the range high. That's what we're looking for price to do. Enter on the 4 minute inverse. There we go. There's our entry. Like I said, the confirmations with that change in state of delivery, we retraced it, but you could have entered on that on the 1 minute. And we're looking to see what price does. Equal highs above, range high, AMD PO3. And price shoots right away to that high. 400 points nearly, almost a 2 to risk reward. And it does end up going to all of these highs. So the higher time frame draw matches with the lower time frame analysis, matches with the lower time frame entry. So the bias is all meeting the requirements, and that's how you can utilize this model to your advantage. We get the higher time frame bias, the higher time frame likely draw on liquidity, which was those highs alongside these highs, those highs alongside these highs as the bigger draw. We go on the lower time frame, we get the confirmations of that PO3 type move. We go on the lower time frame for the entry. You get that confirmation and you take advantage of this move all the way to these highs. If you wanted to hold for some of these highs, you could have definitely done that as well. But that is the basis of how you can use PO3 alongside the additional analysis of finding the drawn liquidity and putting that towards your advantage. So with that being said, I hope this was insightful. I hope you learned something here, how to utilize PO3 to your advantage. This very, very simple move, but how you can pair it with everything else in the markets to put yourself in the best position to succeed. I wish you good luck, good trading, and take care, everybody.